661,000 jobs added. The Economist survey was about 859,000.
Strong is not the first word that I would use. I would say that it's great that we added 661,000 jobs, but that is a slowing pace. It is worrisome because that momentum is expected to continue to slow into the end of the year, especially if we do not have additional stimulus for the most impacted parts of the economy. The risk is that the firewall that we built around the COVID impacted parts of the economy begins to break down and hurt not just those areas of the economy, but that it bleeds over into other parts of the economy. So shoring up that firewall is a really important thing. And this jobs report shows that that firewall is beginning to break down.
Just 1 second, Constance. I just want to let everybody know that Joe Biden has tested negative for COVID-19. That's according to an MSNBC reporter. Again, there was the reports earlier today that Biden was getting tested for coronavirus given his potential exposure. He was in, of course, the same room with President Trump on Tuesday for the debate. But again, an MSNBC reporter is now saying that Biden has tested negative for COVID-19. Adam?
Constance, welcome back. It's good to see you. I'm curious if there was anything that stood out in the jobs report to you, whether it be negative or positive. I've been harping a lot today on that permanent job loss number because we were advised to pay attention to that. Were we misadvised, or is there something else you're paying attention to?
No, that's an important feature of this recession, although it's very, very different than a normal recession. Normally, the permanent job losses start out very high and they gradually decline, and the amount of temporary job losses grows into a recession. We've seen exactly the opposite in this situation. We had a high number of permanent job losses. Almost 90% of that initial report in April were temporary job losses, and we've increasingly seen those turn to permanent job losses. But that is something we would expect because COVID has gone on longer, I think, than the initial estimates that we had in, say, March and April. And as firms have had to face the reality of ongoing challenges, they've had to convert some of those job losses over to permanent job losses. So it really speaks to the reality on the ground. One of the indicators I look at all the time is the diffusion index, and here I do think we have a piece of good news. The diffusion index is high. It shows over 65% of employers are adding jobs. And so that is a very, very good sign. The recovery in jobs was broad-based, even though it slowed in September. I think the real question, though, is what does this jobs report tell us about how the economy is going to unfold in the fourth quarter? And what it presages to me is a much slower pace of recovery. And that is where the concern comes in.
Constance, this is Emily. Kind of leaping off on that point, one of the things I've been thinking about is what's not included in this September jobs report. And those are some of the corporate layoff announcements we've had over the past week or so. Just between Disney and the airlines, we have tens of thousands of job losses coming. With that in mind, what's your expectation heading into October? Of course, this being the last report we'll get before the election, but what are you seeing for the coming month?
Yeah, so we also look, for example, at the home-based data, which has been very, very helpful in determining service sector jobs. And there we're looking at a slight decline in jobs in October. So we're going to continue to triangulate and look at both the official data and some of this high-frequency data that can give us a real-time read on what's going on jobs-wise. And of course, remember, the headlines about the job losses are sad and tragic, but what maybe doesn't get as much traction is the headlines about all the jobs being added. So for example, LinkedIn had a story the other day about all the firms that are adding jobs. And when I added up all those jobs, it came out to be just shy of 1 million jobs. So we'll need to see what the net result is. Certainly there are firms like Lowe's, Home Depot, Amazon, a bunch of companies were adding jobs because certain parts of the economy are actually doing well as people are shifting their consumption to things that make their experience of being at home better, sort of what I call the FOGO, fear of going out economy. The problem is that switch is not big enough to overwhelm the losses that we're seeing in the FOMO economy, the fear of missing out economy, things like going to restaurants, baseball games, concerts, that sort of thing.
Hey, Constance, Rick Newman here. What will it take to go from a decelerating pace of job growth to an accelerating pace of job growth, and when might that happen?
So I think it would take the virus, slaying the virus, right? So whether that means a vaccine, whether that means widespread precautions like mask wearing, hand washing, social distancing, really eradicating the spread of the virus, all of those things together can help reduce the virus. And when we slay the virus, then we will see probably a rebound in economic growth. The fear, of course, is that the longer that time goes by where we don't get a handle on the virus, the more economic damage. And like I said earlier, the firewall we built around the really severely COVID impacted parts of the economy was good. It's starting to erode. And without that firewall being shored up with additional assistance, the fear is that this starts to bleed out into the broader economy, and that has longer lasting scarring effects. It makes it harder to recover from the recession, and it starts to impact families in a longer term way, impacting their wealth, impacting their credit scores. So we do have areas for concern the longer we go without slaying the virus.
Constance Hunter, KPMG Chief Economist. Thank you so much. Really appreciate it, Constance.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.